January after annual revisions from the government revealed less vigor in the labor market last year than previously thought. It is a slower but still solid pace of job growth, even after the recent LA wildfires. Ellen Zentner is Chief Economic Strategist at Morgan Stanley.
So you look at the number of people that were not at work due to natural disaster, weather, that sort of thing, and it was outsized. So you know that this would have been a stronger number without it. And we've just got a great trajectory on the labor market.
Alan Zentner of Morgan Stanley. Expedia Group higher after posting better-than-expected gross bookings in the final months of 2024, reflecting resilient travel demand. Expedia right now surging by 17%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie. Do appreciate it. Hey, one stock moving higher right now is Uber. Shares are up by 7.2% as we speak. They were up as much as 9% earlier in the session.
I feel like this came out of nowhere.
It came out on X, which is Bill Ackman's favorite place to be, it seems like.
Okay, all right. Walk us through it.
Okay, so he said his hedge fund, Pershing Square Capital Management, Bill Ackman, that is, owns 30.3 million shares of Uber. He cited the strength of the company's management and says the stock is undervalued. We've got with us Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst. Mandeep, Ackman said his firm began building this position in Uber in early January, a stake worth about $2 billion. As of the close on Thursday, he said, quote, Uber is one of the best managed and highest quality businesses in the world. What does he think the market has been missing?
Well, clearly he thinks the valuation, when you look at Uber versus some of the other online marketplaces, the valuation for Uber is much lower. So that is one compelling argument that I feel you can make with Uber. The other is, I mean, everyone has been talking about the rollout of autonomous vehicles and Waymo expanding to 10 more cities. But when you look at the scale of the rides, I mean, right now, Waymo is about at a run rate of, 6 to 7 million rides. Probably it'll be doubling that this year. Compare that to Uber, which does 13 billion rides, including delivery. So we're talking about not even 0.1% of overall rides. And from that perspective, Uber's scale is, when you compare it to everyone else, it's just matchless. And so that's the argument. And scale is the biggest moat when it comes to online marketplaces. We have seen that, with Airbnb and some of the other marketplaces as well, that once you have the scale, it's very hard for any new company to unseat, that scale mode that you develop. So that's really the bet. I mean, look, when it comes to profitability, right now it's all dominated by ride sharing. The delivery business is slowly getting better. They're layering in ads. They have an unprofitable freight business. So you could argue, the sum of the parts, there is a discounted valuation because not every business is of the same quality. But clearly, from a valuation perspective, they trade at a much lower multiple than their peers.
Oh, okay. So Ackman is saying, the stock is undervalued. Wedbush coming out saying that the weakness in the stock is unwarranted for a company demonstrating strong fundamentals. So you agree that they do have strong fundamentals and that there's some reason, I'm not asking you to make a call on the stock, but the underlying business is strong.
I mean, right now, the bear argument is if autonomous vehicles were to scale, then Uber would get disintermediated. And I think that bear argument is very valid in the case of Lyft. I mean, Lyft used to be 30% of Uber's market cap. Now it's not even 3%. So clearly, Lyft has, really gone down in terms of overall value. But when it comes to Uber, I mean, look, if a Tesla is rolling out autonomous vehicles and they don't use Uber's platform, then over time, that demand for ride sharing will shift. And same thing with Waymo. They have partnered with Uber in 2 cities, but not in the other 8 cities they're rolling Waymo out. So there are question marks around whether regulators will allow these autonomous vehicles to operate on their own, who will insure these autonomous rides. There are a lot of questions, and which is why everyone is betting the rollout will be a lot more slow than what the market
Well,
is currently pricing.
Elon's calling, and he says, I got a lot riding on this, and I'm in Washington, D.C., and I'm making a lot of changes, Mandeep. On that, Uber had, years ago, this autonomous driving unit. They did a lot in Pittsburgh with Carnegie Mellon. They ended up moving in a different direction. Was it a mistake for Uber to move away from developing its own driverless tech?
In hindsight, I think they did it during the onset of pandemic when they were forced to cut costs because the demand evaporated. And so I think if today they had their own autonomous technology, they would be in a much better position. And that's why I'm not ruling tucking acquisitions out. Uber has been acquisitive. So I wouldn't be surprised if they want to, make smaller acquisitions. Probably partner with other vendors like Mobileye and, some other vendors that want to roll out their own autonomous technology and just don't want to do it themselves. So that's where Uber's platform would be perfect.
I can't even imagine like driverless cars in New York City.
Yeah, I've talked to some folks. Well, Mandeep, do you think they could pull it off in New York? I know we've talked about San Francisco and how amazing it is there. I got to ride in it there. For Waymo, I was super impressed. Do you think New York it just won't work because of New York City streets?
Yeah, and look, with San Francisco, it took them a number of years. So that's where, every city is different. I mean, I'm not doubting the technology. I think they've figured out a way. It's just the rollout will take time because, everyone wants to make sure this is 100% safe and you want to collect data before you allow these to operate at scale. So that's where I think the rollout will take more time than what the market priced in.
Makes so much sense. All right, I'm going to leave it there. Hey, Mandeep, thank you so much. Mandeep Singh, Bloomberg Intelligence Senior Tech Industry Analyst, doing double duty for us on this Friday with the rundown on Uber, which is right now up about 7% in today's session. Earlier, we talked with him about Amazon.
Hey, speaking of Amazon, shares falling by around 4%. Right now, down 4.2%. This after the company warned investors that it could face capacity constraints in its cloud computing division, despite plans to invest some $100 billion this year. Carol, most of the money going toward data centers, homegrown chips, and other equipment to provide AI services.
More, it seems like. All right, let's get into it. We are certainly kind of just talking so much about Amazon with a good reason. It's such a big company and certainly can impact the trade. Matt Day is with us. He's Bloomberg News technology reporter joining us from Seattle. So, Matt, the good, the bad, is there any ugly from Amazon's report? It's just a case of just not being able to meet up with demand on kind of the data side and the AWS side?
Yeah, that's probably the ugly for sure. Microsoft's been making noises for a couple of quarters now that they are just not able to satisfy cloud demand, particularly for the AI stuff that everyone is so interested in these days. Yesterday, we saw Amazon make the same kind of noises saying, listen, they can't get enough chips, can't get enough motherboards, can't finish data centers and get them connected to the power grid quick enough. So that might sit on their growth for what's their most profitable division and has been for quite some time.
Some of those companies, though, are rewarded for making investments such as this. Meta Platform, certainly a different type of company, of course. Amazon is the one providing the cloud. But when Meta says they're going to, increase CapEx, they don't get punished by investors. Why does Amazon?
That's a great question. One of the things that puzzled us a little bit about this one was they just did so well in so many other arenas, right? Their spending growth in other areas was real tame outside of the pure CapEx figure. They beat on a whole bunch of other metrics. So I think what you're seeing now is just people kind of coming to terms with the scale of these investments, right? Amazon, Microsoft, Google are all spending, numbers are going to round to $100 billion building out data center fleets primarily. That's just a whole lot of money. And I think, though, there's been a lot of patience with these companies as, market cap has just exploded since the dawn of the generative AI age. There's the revenue side is still real small. Microsoft says they've got a $13 billion annual AI business. Amazon says it's multiple billions. We don't know exactly how much. So I think people are still kind of waiting for the payoff.
Amazon's such a massive company, a few moving parts to it. And, we focus so much on AWS because we understand how important it is in terms of profitability for the company, Matt. But what about the retail side and what it says about that business and what it maybe even says about the U.S. consumer, not even U.S. consumer, it could be global consumer?
Yeah, the retail side wasn't too bad. This quarter that you just reported for was the holiday quarter. Sales were fine. Folks were a little disappointed on the forecast for the current quarter, but a whole lot of that is just we had an extra leap day last year, and given how how big Amazon is these days. One day is about $1.5 billion in sales, so that's gonna take the wind out of some sales. But the retail business is doing fine. They say folks are still trading down for cheaper items, store brands, that kind of thing. But no signs of anything apocalyptic out of the big old retail business from Amazon.
There's this tax break that we talked about with Spencer Soper earlier this week, and there was concern that it would not be exempted under Trump's tariffs. Now we're getting some conflicting news about that. This is the type of tax break that would really help companies that are importing goods that are under a certain amount. And there's a strange history here. We got into it with Spencer Soper. What's the latest on that?
The de minimis rule.
And this was it was for traveling, almost a century ago.
Pretty wild.
Yeah.
Yeah, suddenly a loophole big enough you can drive a Temu or a Shein through it.
Well said.
The latest, it sounds like some of that was getting pared back. I'm still, frankly, unclear on exactly where that is going to land. Been a whole lot of whiplash for folks who try to import things from China in the last week or two here. So I think they're still sorting that out. But one of the bottom lines for Amazon is, you see this de minimis tax exemption in headlines. Amazon is less exposed to that than a whole lot of other companies that have built business models really around sort of small parcel imports. A whole lot of the stuff that Amazon sells on its shelves, it's coming old school style in pallets. It's coming in cargo containers on ships, that kind of thing.
So we would benefit Temu or Shein maybe more so than Amazon?
Yeah, potentially if there's an exemption and then the exemption holds, right?
Okay.
Yeah, for sure. That's a bigger benefit for those companies that stake more of their business on.
Hey, Matt, super quick. Anything on the call that you feel like you didn't quite get the answer, or you feel like you wanted more from Amazon? Just quickly.
It's a great. When does the AI revenue show up? That's the biggest question, I think. When does it show up commensurate with the spending? A lot of money going out the door.
It's a big question right now, right? And you think about with the DeepSeek developments, like everybody's questioning if all those who are spending billions and billions of dollars have it right. And I guess time will tell. All right, Matt, thank you. Enjoy the weekend. Matt Day, Bloomberg News technology reporter, joining us from Seattle. Just taking a quick check on shares of Amazon reacting to their earnings. They were down. Yeah, they're pretty much near their lows of the session, just off of them, but still down about 4%. But remember in the aftermarket, I think we're down about 7% initially, and then kind of popped off of that. So not as deep as it could have been in terms of losses.
Hey, we're going to get deep next with David Jones no, not David Jones, actually. We're going to be driving to the close in just a few minutes. Andrew Cry is going to be joining us. We'll get deep with him.
I'm looking forward to it.
David Jones is in about an hour.
Ah, nice deep tease.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. 20 minutes to go until we wrap up the trading week, a week that looks like a losing week right now, but we've got the Dow, the S&P, NASDAQ all in the red. Over we go to the first word breaking news desk for today's afternoon call, and here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are under pressure right now with more tariff talk from Trump. Dow is currently down 426 points. S&P's dropped 58, while NASDAQ is lower by 1.4%. The U.S. 10-year yield is at 4.48%. Gold is up 7. Oil is in the green. And Bitcoin, that's lower by 0.4%. Among the main 11 S&P sectors, only energy was in the green, and leaders to the upside in the Dow, Chevron and Coca-Cola, while Nike fell 3% and led to the downside. After earnings, Expedia rose 17%, while Elf Beauty plunged 19%. And in U.S. politics, Trump said he will announce reciprocal tariffs Monday or Tuesday. In other news, Bill Ackman says that he's amassed a $2 billion stake in Uber. And wrapping things up, Facebook is trading higher for a 15th day. That's the longest winning streak ever. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, have a great weekend, Bill, and we thank you. And to hear live breaking news over your Bloomberg-type squawk, SQUA on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes or so left to go before we wrap up the Friday trade and the week overall. We've got stocks hovering, bumping along the bottom here. You just heard Charlie and Bill Maloney talk about the trade. NASDAQ 100 down 1.3%, the most on a percentage basis of among those large equity averages. I look at the S&P 500. Most names are lower, 364, Tim, to the downside, 136 to the upside. So, yeah, we are seeing a bit of a risk-off trade, and safe to say some concerns over some of the economic data that we got earlier, concerns about inflation, and then more talk of tariffs, again, feeding into that inflation fear.
Well, let's talk a little bit about that with Andrew Cry, Co-Chief Investment Officer over at Crescent Grove Advisors. Andrew back with us from Milwaukee, Wisconsin. Andrew, how are you?
I'm doing well. How about you two?
Yeah, we're doing pretty well. We finally made it to Friday, which is a surprise because this felt like the week that would never end. I guess we're not there yet. We do have about 18 minutes to go until the close of trading here. As Carol mentioned, there is some concern when it comes to tariffs. We saw that with the confidence numbers that we got earlier today. How do you think about tariffs, not just the prospect of them, but the way that they can change consumer confidence?
Sure. Well, I would say one thing, what we're seeing today, we're investors, not traders, but if I was a trader, I probably wouldn't want to be long going into a weekend where there could be even more headline risk around tariffs and these sorts of things. So I think it just sort of changes the dynamic day in, day out. Again, it doesn't necessarily affect the way that we think about deploying a portfolio on a 3 or 5 year basis, but I think the confidence number is a great indication of just kind of the weight that can have, the toll that it can take. Also, the 1 year forward inflation expectations that we saw in the University of Michigan survey, I think that certainly ties into the tariff picture. So it flows in through all sorts of different avenues. I think from our perspective, still base case though, is that it's more bark than bite. So, we're going to see a lot of headlines. We're going to see the sort of rhetorical risk that bubbles up to the surface. We're going to see volatility day in, day out, week in, week out. But at this point, we still think it's probably not going to materialize into anything that's going to derail what looks like a reasonably good year for corporate profitability.
So it all comes down to that. However, if we start to see growth slow down, would you think differently in terms of the pressure that might come on corporate profits?
Without a doubt, right? I mean, I think that's what we're watching just to see how acute are these tariffs actually going to be in terms of their impact, strip out the rhetorical piece of it relative to what is actually going to impact corporate profits. We're watching it closely, but again, our base case at this point is that it's just not going to be impactful enough to derail what looks like a reasonably good year for corporate profits.
Andrew, why do you think it won't be impactful enough? Because they won't last for long, they won't be as severe, they'll be very limited, there'll be exemptions. Why?
Yeah, I think it's the limited nature, sort of the scope. Ultimately, I think it seems like sort of an exercise in terms of just drumming up the base, getting enthusiasm around the rhetorical side of it, the sort of political theater around these sorts of things. there will be pockets of impact, no doubt, but we think ultimately that's the focus right now, is to create the kind of flow of headlines and that sort of thing to generate some political victories. And then at some point too, we think, okay, the focus then shifts towards taxes, tax cuts, making the tax cuts permanent, that sort of thing, and the tariffs perhaps fade into the background.
Do the tax cuts become a reality given the split Congress? And I shouldn't say it's split, it's all Republican controlled, but it's very close.
That's right. Yeah, I think there's definitely going to be some wrangling to be done around, just the concerns with the deficit, and will this be something where they can find areas where they can continue to raise a little bit of revenue to perhaps offset what's become a very large deficit that we continue to run. I think all told, they will find a way to get it done. I think there's enough political will for that at this point in time, and I think the consequences of the other side of it, if they don't get it done, I think could be pretty bad, right, for markets, certainly, and that's something that we're attuned to in terms of risks on the horizon. But at this point, again, our base case is that they find a way to get that done.
All right, so you got to put new money to work. Investor comes to you and says, here, I've got X in my portfolio. Where do you put it to work right now?
So the working theory that we have here is that we've talked, I think the last time I was on with you all, we talked about the sort of relative value rotation that we're expecting to play out over the balance of this year now, but over the next, call it 12 to 18 months. And the way we see that sort of working is that the DeepSeek scare, I think, was front and center in terms of the kind of risk to growth stocks right now. So we'd be a little bit more cautious around U.S. growth stocks, probably not putting money to work necessarily there, new money to work, but looking at more of the value side of things. So financials, industrials, things that would benefit from, again, a sort of broadening of corporate profitability, broadening of growth in terms of EPS growth, and a convergence between growth stocks and value stocks in terms of their relative earnings. And then ultimately starting to see EFA's done pretty well this year. If we get a little bit of momentum there, maybe on a 3 to 6 month horizon, there's a U.S. value to DM international rotation. And then after that, if we kind of start to see this continue to play out where, it's not as bad as we think from a tariff perspective, then we see DM international, Europe, Japan rotate into EM, which would be kind of the final frontier of the high beta play on a reasonably good global growth backdrop going forward. So that's kind of how we're seeing the next 12 to 18 months play out.
So where do you not want to be?
Well, I think it's mega cap tech at this point.
Really?
And maybe it's not that we don't want to be there, but just from a market cap weighted perspective, if we're thinking about an S&P 500 portfolio, take it where it is today with 30 some odd % in the Mag 7, give or take, or the top 10 names, we'd rather be a little bit underweight in that segment right now. And I think, again, the DeepSeek headline that we saw, the reaction off of that, I think was just indicative of how sensitive those names would be to a potential derating if the narrative gets challenged at all.
I think everybody is trying to challenge it, and I think try to figure it out. I mean, where are you? Are you kind of on the fence about, okay, maybe they've got something? I mean, technology tends to innovate, disrupt, get cheaper, right? We know that that's often the cycle. It might take some time, but are you kind of on the fence whether or not this AI spend, the billions and billions of dollars, whether or not that still makes sense or whether it might not?
I think that's the big question. I mean, these companies went from, in some cases, very capital light to very capital intensive businesses. And if they get this wrong, in terms of the return on invested capital, or at least if they're not quite as right as they think they're going to be in terms of the ROI that they're going to generate on these investments, at some point then it's sort of malinvestment, right? And at least it sort of would cause you to not want to pay the types of multiples that we've been seeing, 30 plus times now, 35 times on the Mag 7 basket. If you want to think about that as kind of an index in and of itself, that just seems like it's a pretty premium valuation relative to take an S&P 500 equal weight, trading at around 17 times forward earnings, and we get a broadening of earnings growth story, as I alluded to before. That to us seems like a pretty good relative value trade-off right now. Again, not to say that these mega cap tech companies are bad businesses, or they're going down, they're going to zero or anything like that. It's just, I think the relative value opportunity to us is what looks so appealing.
Andrew, gonna have to leave it there. I love the idea of sort of being underweight big tech.
That's pretty interesting, right?
Yeah.
Well,
that's
what
makes a market.
Like, do you wait a little bit? And if you start to see a lot of investors doing that, we know how important they've been to propping up the overall market indices, and that pulls things back.
Andrew Cry, co-CIO over at Crescent Grove Advisors.
All right, folks, we've got just about 10 minutes to go until we wrap up the trading day on this Friday. Do not go anywhere. Tim and I coming back in just a moment, right here on Business Week.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, we are just about 7 minutes away from the closing bell on this Friday, getting ready to wrap up the trade for the day and for the week. As we've just heard, we are kind of hovering near our lows of the session. In the meantime, we want to bring you a story that is definitely caught our attention, and that has to do with a Bloomberg exclusive. It has to do with a member of Elon Musk's Doge team who are working on efficiency moves.
You've heard of some of these young people.
Yes.
There's a teenager there, 19-year-old, Edward Korestein. He's a 19-year-old member of Elon Musk's squad that's crisscrossing U.S. government agencies. He was fired from an internship after he was accused of sharing information with a competitor. This is a June 2022 message shared with our Bloomberg News team. Quote, Edward has been terminated for leaking internal information to the competitors. This is unacceptable and there is a zero tolerance for this.
We should point out it's back in June 2022, this message from an executive of the firm Path Network. Now, a spokesperson for the Arizona-based hosting and data security firm said yesterday, quote, I can confirm that Edward Korstein's brief contract was terminated after the conclusion of an internal investigation into the leaking of proprietary company information that coincide with his tenure. Afterward, Korstein wrote that he'd retain access to the cybersecurity company's computers, though he said he hadn't taken advantage of it. So he did respond to that. This was back in 2022. I think, part of the reason we are talking about this and why it's interesting is that I think there are folks wondering who are a part of the team that Elon Musk is working with as they go through different departments of the government. We heard about President Trump talking earlier about that he has enlisted Elon Musk and his team to go through the Department of Education, the Pentagon, the military, and there probably will be some others, he said.
Well, you mentioned the idea of questions about being vetted. Earlier this week, Wyden and other Democrats on the Senate Intelligence Committee, that's Ron Wyden, he asked White House Chief of Staff Susie Wiles to explain how Doge members were vetted and what steps the Trump administration has taken to ensure the classified and unclassified systems and records the Doge team has accessed are safeguarded from disclosure. We should know, Carol, Korestein did not respond to requests for comments, and attempts to reach his parents for comment through publicly listed telephone numbers were unsuccessful. The White House also wouldn't comment directly on his employment, but an official who discussed the situation on the condition of anonymity said all Doge staffers under Musk were working as employees of relevant agencies with security clearances.
Yeah, and we should keep in mind that Doge's moves across the U.S. agencies, we've talked about this a lot throughout the week, have put a spotlight on how Elon Musk, the world's richest person with a $412 billion fortune, tends to operate without regard for norms or traditional boundaries. Again, this is coming from our own reporting here. So I think we're just trying to get a feel of who is part of this group, what access they have, what kind of information, and what it means, especially since, to be fair, a lot of these departments have a lot of very important and private information about a lot of different Americans.
That official did say that the employment is in compliance with federal law and that they are not outside advisors. So another thing to note.
Yeah, so something we're just keeping a watch on. Hey, we're also keeping a watch on the trade here on this Friday, as we mentioned, kind of bumping around the lows of the session. So we're down about almost 1% on the S&P 500. More names in that index losing some ground on this Friday versus those that are gaining. NASDAQ 100 down about 1.3%. That's a 277-point decline. So definitely a bit of a risk-off trade. Safe to say, we talked about this with our Mike McKee, some concerns about the economic data today, how that might play into inflationary concerns. Sentiment was low because of some concerns that people feel about higher prices perhaps in the environment. And then, of course, we did also have more talk of tariffs. We're going to get some more news on that next week from the president. What?
Guaranteed?
Why are you laughing?
Guaranteed?
Why are you smiling?
You think that news is going to come next week?
I know it's going to come. Well, something's going to come next week.
Yeah, well, it could also come tomorrow or Sunday.
Oh.
I'm just throwing it out there to be aware of,
Yeah. Well, certainly, right,
stick close to your devices, right?
Even if it's just general statements, right?
Yeah.
So get ready, everybody. Do not go anywhere, though, because we are going to count you down to the close on this Friday, walk you through some of the movement. Stick around, everybody. Tim and I heading over to our TV colleagues. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Alex Steele and Scarlett Fu in the TV studio helping you to take you through the closing bell. We got a global simulcast. We're joined now by Carol Massar and Tim Stenovic, bringing together a Bloomberg television, radio, and YouTube audiences worldwide to parse through the most important, crucial moments of the trading day. Well, that was a rough day for the S&P.
I know, here we are, right, bumping along the bottom. Again, there's like inflation concerns, whether it comes from possible more tariffs out of Washington or whether there's some concerns. We saw that in the consumer sentiment numbers, concerns about inflation, higher prices among folks out there.
Well, I think if we're talking crucial moments of the trading day, I think 10 a.m. when we got that UMISH sentiment number that came in below expectations. Look, tariffs are starting to weigh on consumer sentiment. That message is clearly getting through to consumers.
Absolutely. I like what Davis Arabi just told us. Tax cuts, deregulation, government efficiency, all those things are 3 steps forward, but tariffs are like 1 to 1.5 steps back. And what have we gotten concrete details on, at least a focus on in the first 2 weeks, 3 weeks of the Trump administration?
2.5 weeks.
2.5 weeks.
Feels like a year.
Yeah, I know. It's been tariffs, right? That's what he's been focused on.
Yeah, the question is, though, is it real or is it a negotiating tactic, right? Like, what's the ask for the other country? Well, I'm taking a look at what we've learned throughout the week in terms of retail buying, right? Mom and pop investors coming in pretty strong on 2 to 3% declines in terms of a buy the dip. Do we see that then coming in on Monday as well?
Yeah, whether or not the enthusiasm continues, right, and helps to prop up kind of the markets here. I guess we'll have to wait and see. I mean, we're still in earnings season. We're not quite done, so maybe that helps or hurts.
Robinhood reports next week.
All right,
Alex, so
we are wrapping up the Friday here on this trade. When it was a kind of a choppy trading session for the S&P. Looks like the S&P is going to close down by about 0.9%. You're around the lows of the session. We're also looking at the NASDAQ off by about 1.3%. The Dow up by 1% as well. Guys, just want to point out that small caps not spared, down over 1%. The Mag 7 also not spared, down by about 2%. The only upside there, NVIDIA and Meta.
All right, guys, looking at the S&P 500, most names in the index, no surprise, lowered today, about 364, losing ground on this Friday, 140, Scarlett, to the upside.
And there's a lot of red when you look at the sector performances as well. That's the IMAP for you, all 11 groups in the red. Consumer discretionary off by 2.5%. Of course, that does include Tesla and Amazon. Communications services down 1.2%. Materials off by 1.2%. Your better performers, energy basically unched, and utilities and industrials losing just about 1/3 of 1%.
Wow, that's a really clear chart. For those on radio, it's all red, the IMAP here at
Good luck
Bloomberg.
with gainers.
I got a few.
Okay.
Uber, folks, finishing off its highs of the session was up more than 9% at its highs today, but finishing the day with about a 6.5% gain. So it was among the top gainers that we saw certainly in the trade today. News, Bill Ackman, his hedge fund, Pershing Square Capital, owning 30.3 million shares of Uber.
I like that. Let's call it that.
Uber. Okay.
Oh, my God. Uber. It's so Friday. So we're talking about, based on Thursday's close, let's try and get it straight, owning a little over 1% of the company's market valuation, basically thinking it's well-managed or one of the best businesses in the world, but definitely undervalued. One more name for you, Take-Two Interactive, guys. This is among your top gainers, number 1 in the NASDAQ 100, top gainer in the S&P 500, 14% higher in today's session. The company reported earnings after the close yesterday, full-year net bookings guidance, and reiterated its plan to launch the highly anticipated Grand Theft Auto 6 in fall of 2025. Anyway, that was enough to push this one higher.
Okay, you got the gainers. I got the decliners. No shortage to choose from. I did want to go with Amazon, though, dragging the S&P 500 and NASDAQ 100 lower, falling 4%. The company did warn of capacity constraints in its cloud computing division, AWS, despite plans to invest $100 billion this year. Andy Jassy said growth will be, quote, lumpy due to challenges securing sufficient hardware and electricity, and that power capacity and chip supply are limiting the ability to bring new data centers online. AWS revenue did jump 19%, but Jassy's warning on those growth constraints overshadowed that fairly strong holiday quarter. And then Newell Brands, it's the parent company of Rubbermaid, Yankee Candle, Sharpie, Mr. Coffee, Elmer's Glue, and many more, down 26% today.
Nice little mix.
It's honorable,
A lot of companies.
Yeah.
At one point, shares fell the most ever in a single day. At the close, though, the worst day going back to 2017. Newell Brands issued a disappointing preliminary annual outlook, projecting a steeper than anticipated decline in full-year sales.
Yeah, taking a look, also just guys, Arnold mentioned Tesla, down 11% this week, the worst week since October, I know, right? I'm taking a look at the bond market. Stuff did happen there. It was actually quite an interesting trade. Sell-off all across the curve, though. We're obviously off the lows of the session. A couple things to point out is that next week we get 3 10s and 30-year auctions, well over $100 billion worth of supply coming online. Also, 4.5 is what many investors are watching with that 10-year yield. If we break above that, do we make a run to 5? So there's some technical stuff going on here as well, guys.
Yeah, we also get some inflation reads next week, right? CPI, PPI. We also get retail sales on inflation day, on Valentine's Day. It could be inflation.
It might feel like inflation day, yeah.
Right? If you're trying to buy flowers, they're pretty expensive right now.
Well, can you imagine a card? The only thing inflated is my love for you.
Oh, please, no.
Pretty good, right?
No, that's bad. Don't say that. Just buy the chocolate.
Why was there so much silence?
Our producers liked it. Our producers liked it.
Finley
yeah,
is
but
the
our
only
producer's
person
not
who
married. Don't
acknowledged
do that, Tim.
Come on, Finley, you know better.
Tough crowd. Tough crowd.
But I think the point is pretty valid. Valentine's Day will be expensive because cocoa prices are high. So like that's the real deal again there, guys.
All right, we also got some earnings coming next week. Deere & Company, Molson Coors, Applied Materials, Coinbase, and then Robinhood Markets. So, Alex, maybe we'll get a read on the retail investor from Robinhood.
All right, we got to wrap, guys. Do your Valentine's Day shopping. I'm just going to point that out. That does it for our cross-platform coverage of the market close on Bloomberg TV, radio, YouTube, Bloomberg Originals. Alex is heading out for the weekend, maybe to do some Valentine's Day shopping. We on Business Week, though, sticking around as the close continues with a special guest on the big game this weekend, the president of one of the teams playing in the big game. And for that, we toss it back over to you, Scarlett. Take it away.
All right, thank you so much, Carol. It's time now for a special edition of The Close, the business of the Super Bowl. We've got an all-star lineup. We've got Kansas City Chiefs President Mark Donovan, New England Patriots CEO Robert Kraft, FanDuel CEO Amy Howe, among others. And joining me for this entire hour is Bloomberg Originals Chief Correspondent Jason Kelly, host of The Deal with Alex Rodriguez and Jason Kelly. Great to have you here.
Hi.
It's fantastic.
What a Friday.
I know.
I mean, the Friday to do this, right?
I'm imagining there's a lot of deal making going on in New Orleans right now with everyone from the sports industry gathering.
Everyone is there. I mean, everyone except us because, you know, we're working for a living. But actually, they are doing deals. I mean, this is when the big deals happen in the sports world because the entire sports world, as you mentioned, sort of descends. Maybe they don't stay for the game, but they're at the parties, they're going to the conferences, they're doing the side meetings. It's amazing. We're going to check in with Randall Williams, who's on the ground.
So
part
much
of
to
our
talk
team
about.
there, a ton to talk about.
All right, so mind meld there for everyone in New Orleans. In the meantime, let's get straight to someone who's been living the business of the Super Bowl since 2020. He is Kansas City Chiefs President Mark Donovan. Mark, welcome to the program and congratulations on your 5th trip to the big show in 6 years.
Thank you. I appreciate that. It's great to be with you guys.
So as the organization makes a run to become the first 3-peat Super Bowl champions, would you say you're more or less nervous this time around?
You know, I think experience is a great teacher. So we've done this enough to realize sort of what makes it successful. We tweak things every year, but it's been a really smooth operation since we landed on Sunday night and started practicing this week, and it's going very, very well.
It's going very, very well. I want to talk about the Chiefs as a brand because it's so much more than a regional team or even an American team at this point, right? It is a global brand that really resonates with sports fans around the world. Talk a little bit about your organization's international efforts and how you have a new entertainment production studio that plays into that really amplifies that.
Yeah, it's a convergence of the platform that we're on right now. I mean, we have one of the most successful franchises in sport. We have the world converging and consuming content like never before. And then the international program that the NFL launched back in 2019 gave us and other franchises the opportunity to aggressively pursue growth internationally. And we've been one of the more aggressive teams to do that. So the convergence of all this on top of being in for the last 6 Super Bowls, and the opportunity to constantly be out there with content is something that we've been very excited about, we've taken advantage of, and we've seen results from. So Foolish Cup Studios is something we launched this past week that gives us the opportunity to create even more ideas and then distribute that content internationally, hopefully.
All right, so Mark, obviously a chance to create more content. Let's be honest, this is Bloomberg. It's a chance to create more revenue when you're this successful on the field. Walk us through what it means to the top line, the bottom line of your team to be consistently in the big game and, you know, now going for your 3rd straight win. What does it do for your business?
Yeah, I think that's a fair question given the audience here today. I think that when you look at our business, we are on a platform we have never been on as a franchise before. And so we look at that as opportunity. What can we do in this platform to take advantage of this time to maximize the platform? So top line, bottom line, it's growing brand value first and foremost, and then everything that sort of comes off of that. And we are very successful in Germany after investing in there over the last 4 years. We're the #1 team from brand value in Germany. We have the most revenue from a sponsorship base in Germany. We're looking to do that again and again and again as many times as we can. The opportunity and the platform that I speak of is the international market. So, as we grow, we now have the ability to grow internationally, and that's really the focus.
And so, Mark, part of it is growing the audience, and some of that comes from just showing the games. Also, you mentioned the additional content, but also social media has been especially powerful for you guys. You are one of the most followed teams out there. How do you continue to grow that? And are there certain platforms that are working better for you overall?
Yeah, so it's a combination of things. It's one, the superstars that we have on our team and what they've done with content, with Patrick and with Travis, with his podcast. And it's sort of dovetailing with that and then using the content that we have. We have a program on YouTube called The Franchise, which is an inside look at our team. We're the first National Football League team to have over 1 million subscribers on YouTube. We're the second sports franchise in America behind the Golden State Warriors to do that. So those are the platforms that I'm talking about, that you have to have the content to be able to take advantage of that. So we have a production studio in-house that does the franchise show. Now we've launched a production studio that will be more out of house to really look at partnerships around that.
So is it frustrating then with all these plans and this incredible brand, not just in the U.S., but globally, to not have as much certainty as you'd like over where you're going to be playing in terms of stadium down the road?
Yeah, so I would take that two different ways. One, we want to play more games internationally when we're given the opportunity, because we've seen the value of that and we've seen the benefit of that. As it relates to our domestic situation, specifically in Kansas City with our stadium, we are pursuing two different options. One is renovation of the iconic Arrowhead Stadium and GHA Field. And then secondly, investigating the opportunity to build a world-class dome stadium. Two very different paths. And we have the advantage of having two different states that we can go down those paths on. I think with, as I said, on the one hand, it's the iconic nature and how can you make a worldwide bucket list icon of a venue better through a renovation versus if we build a brand new state-of-the-art dome stadium, we have the opportunity to host even more events. So Super Bowls, Big 12 championships, national championships, as well as year-round concerts and events. So it's an exciting place to be in. I will tell you personally, it's a very time-consuming place because you're looking at a bunch of different options and you're dealing with politicians on both sides of the state line. They're both excited about the opportunity, and we just got to figure out what's the best thing for this franchise and for our fan base for the next generation.
Yeah, it's pursuing lots of different paths and kind of seeing where they take you. I wonder if you would ever look to private equity or sell LP stakes to fund the construction of a new stadium.
Well, we have the expert in the building on the private equity program. Clark Hunt is the chair of our organization. He's also the chair of the finance committee at the National Football League. And he was really one of the architects with, I think, one of your next guests in putting together the private equity situation with the NFL that gives us the opportunity as franchises to pursue that. Clark has said publicly, and I know in dealing with the siblings and the family members, that that's not something we're pursuing it in the present time, but it's good to have the option out there. And we've seen the other teams that have taken advantage of this opportunity.
And so what have you learned from that, Mark? I mean, we have seen a number of your counterparts, one of your arch rivals, the Buffalo Bills, who you beat to get to this game. They took advantage of selling a stake. They may use it most likely to build a new stadium or to upgrade their facilities. What are the learnings that you take, even if you're not going to partake of it right now?
Well, first and foremost, the learnings of seeing them go through the process and seeing just what it takes and how to maximize that process. The second thing I think that this gives you is true valuations. The ability for, the firms that have the ability to capitalize on the private equity piece are true evaluators of value. They have to return to their shareholders. So they're investing in these teams and pieces of these teams in a very structured and a very critical way of exactly what the value is so they can see a return. I think just the first few that have done have been really positive signs for the NFL and for the individual franchises that have taken advantage of that.
All right, so you went exactly where I wanted you to go, Mark, which is valuations. You worked on the league side. You worked for a little team called the Philadelphia Eagles for a few years before you got to your current home in Kansas City. You look at these valuations since you were a guy coming up in this league. I mean, is it mind-blowing to you?
Yeah, it's mind-blowing on the NFL side, but I know the NFL side so well that I can sit here and tell you that the valuations are solid. And you look at the growth of this game and look at the opportunities that are in our future. I'm a big believer, obviously, in the National Football League and the power of the NFL. I think it sort of spreads across sport, though. When you look at the valuations of NWSL and NBA, Major League Baseball, MLS, across the field, as well as, properties like the Premier Lacrosse League. The ability to sort of look at these as true investment opportunities and see the growth that sports provides. There's no better appointment viewing, and frankly, from a rating standpoint, no better viewing than the National Football League. Well, how do other sports match up against that, and then how do they continue to grow that?
Mark, before we let you go, I did want to get your thoughts on one thing. Roger Goodell, the commissioner of the NFL, with the backing of team owners, is standing by the NFL's diversity initiatives, even as we've seen some moves on the federal side otherwise. As the head of a high-profile organization, what are you hearing from your employees, from your customers, from your partners on this front?
Yeah, I think as administrations change, you're going to have change. We're very proud of our policies. We're very proud of what we've implemented at the Kansas City Chiefs. It's something that we take very seriously. I was asked this question multiple times today, and I think, I'd point to even our most recent hire. People talk about and know about the Rooney Rule and all that it's done and the process behind that. I think not everyone is aware of, the impact it has across the entire business. So we just had a very significant hire on our communications team, and we went through a very inclusive and diverse slate of candidates. Mm-hmm. We wanted to see all the talent that was out there before we made our decision. So we're proud of our policies, and we continue to sort of lean on those to have the best possible employee base in the National Football League.
All right, Mark Donovan, a pleasure speaking with you. Good luck to you, president of the Kansas City Chiefs. Mark Donovan. I love the fact that you brought up.
All right, everybody. That, of course, was our Scarlett Fu and Jason Kelly talking there with the Kansas City Chiefs president, Mark Donovan, ahead of Sunday's Super Bowl. Yeah, he's probably got a few things on his mind, as you can tell. But he seemed pretty cool, calm, and collected.
So Jason didn't stay for the game?
No, he's back here.
He's back here.
Yeah. It's, I gotta say, it's kind of nice to be, we're gonna make a bunch of nachos and sit in front of the big screen. That's what we do.
Okay.
It's really fun.
Big weekend for snack makers.
Big weekend for snack makers. Hey, folks, we're gonna stay with sports for a moment. And now to the world of golf, Live Golf specifically, which is closing in on more places for its star golfers at the world's most premier competitions. And that is paving the way for unification between the Breakaway League and the U.S. and European tours.
Earlier today, CEO Scott O'Neill, who took over as CEO of Live Golf last month, said Live is in talks with the organizers of the PGA Championship. O'Neill spoke with Bloomberg Television's Jumana Brissecci.
We have been for, of, and about growing the game of golf. And there's so many new and exciting leaders. If you look at Derek Sprague at PGA of America and Mark Darbin at the R&A, and I'm new at Live, and I know the PGA is looking for a new executive as well to work alongside Jay. And I think that provides an opportunity for us all to take a step back, appreciate where we are in this moment of time, and move forward. The fact that the leader of the free world, the President of the United States, thinks that golf is this important that he can engage makes us really happy and validates how important this game is. And I still believe it's one of life's great teachers. And just as important as we could possibly find today in bringing this game together. So any news that brings us closer to that, I think is really welcome news for all the golf fans around the world.
Have you spoken to the president directly yourself?
I have not, no. In a few weeks, we'll be in Miami playing at Doral, which is a Trump course. And I imagine he'll make an appearance there. But, in these first 30 days, I've had the time of my life, getting to know these incredible stars like Brooks Koepka and Dustin Johnson and Bryson DeChambeau. We have the best players from around the world. That's been an experience. Getting ready for this incredible event season, kicking off in Riyadh, and getting our feet under us and planning for the future.
Now, I know you're not in position to give us the contours of the deal, but is it your expectation that if a deal does come to fruition, that it would allow for more coexistence between LIV players and the PGA Tour? Is it your expectation that ultimately LIV players could participate in the PGA Tour without being penalized?
You know, our focus right now is on making sure we take the best players in the world to the best locations in the world. It's a deal and a construct that we've all been working on for some time, and we're all focused on the same goals and objectives, and that is to grow this game, put as many of the greatest players on the biggest stages of the world. And while I'd love to walk chapter and verse into the deal, I will tell you that anything that's good for this game is good for LIV, and we're thrilled that there's progress being made.
Well, there you have it. LIV Golf CEO Scott O'Neill speaking earlier with Bloomberg Television's Jumana Brzezinski.
All right, folks, let's get to the latest on how markets ended up. Any of the news after the closing bell for that? For all of it, let's head back to Charlie Pellet. Hey, Charlie.
Thank you very much. And here's what's going on. The Dow, the S&P, NASDAQ 100 Index, Russell 2000 Index, Dow Transports, all declined today. A lot of red on the screen to wrap up the week. Yes, a losing week for the U.S. equity market, 2 in a row now. S&P today down 57, down 1%. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Stocks erase this week's gains with the S&P 500 index down 1%. President Trump saying he will announce reciprocal levies next week in an escalation of his trade war. The S&P down 57 to 6,025, a decline of just about 1%. The Dow today down 1%, down 444 points. NASDAQ down 268, a drop of 1.4%. The 10-year 4.48%, the 2-year 4.28%. Gold up $6 the ounce, $28.63, up 0.2%. And West Texas Intermediate crude up 0.5%, 71 even a barrel on WTI. Bitcoin just above 96,000, down today by 0.7%. While Elon Musk has been generating headline after headline for his efforts to reshape the federal workforce, the stock of his electric car company had its worst weekly performance since October. Today, on the week, we saw Tesla shares down by 11%. Tesla today declined by 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks for that, Charlie. Appreciate it.
Do you watch the big game?
You can call the what?
Do you watch the
Superb Owl?
The Superb Owl.
Yeah.
Who calls it that? Is that you?
It's just like a little reference to a funny TV show on FX.
Superb Owl?
Yeah.
What one? What show?
Elizabeth, what's that show called?
Oh.
What We Do in the Shadows.
Ah,
yeah.
Superb
Elizabeth has seen the first couple of seasons. There's a nice little, it's very fun.
Oh, have you watched it?
Oh, yeah. Yeah. It's about, it's like not a true story. It's about vampires who live in Staten Island. Very good show.
Just when I think I know my co-host
Very,
or one of my
very
well,
funny
I figure,
show.
that kind of checks out for like Elizabeth. I think. It's
Yeah,
a good match.
she's got a great sense of
but
humor.
I
What do you
kind of,
expect?
Like, learn new things about you every day.
Okay, well, that's, that's great because we've been doing this for quite a while, so I like that.
Forever.
Forever, it's what it feels like, I guess, to you. Hey, Paul Sweeney and Alex Steele, a little earlier, they were talking about this on Bloomberg Intelligence a little earlier.
Super Bowl ads, right?
Yeah, the prices for Super Bowl ads have risen to a record of over $8 million. Sponsors purchasing around 10 of the most expensive 30-second spots for the broadcast on Fox. Paul noting he remembers when it was a big deal that a 30-second spot went for a mere $1 million.
Yeah, $8
Said
million.
15 or 20 million.
Yeah.
Or 15 or 20 years ago.
Yeah. I mean, it sounds like a lot.
Okay, for more on marketing around the big game, we welcome in David Jones, CEO of the Brand Tech Group. It helps brands make their marketing more efficient using technology. He joins us from London. David, good to have you with us. AI and marketing. Why do we need people if we can just ask AI to make funny ads for us?
Hey, the human in the loop is still really important.
Okay, good. That's what I wanted to hear.
you know, I think there's a bit of a debate going on at the moment. People think, but I'm a special creative person, and AI can't possibly replace me. And it's not the point. The point is, this is the most incredible tool. And I think personally, we're going to see the greatest creative revolution in history. But it's about humans using and leveraging these incredible tools rather than getting worried about whether they're going to replace them.
All right. So does that mean, though, in terms of ads, I guess it doesn't matter in terms of cost. It just means it costs less to make these ads. Like, I think about the Super Bowl, and I kind of look forward to the ads, although I feel like sometimes they're not as exciting as they used to be. Tell me, first of all, about that market, because they just get more and more expensive, it seems. I mean, what does it do for a brand, David, to have a spot during something like the Super Bowl where the audience is massive?
Well, look, I mean, very simply, you know, we know we're living today in a world where there's just an avalanche of content. We're in the attention deficit economy, and it's harder and harder to reach people. But one of the things that still works are big live events, as we've seen. I mean, last year, 123 million audience at the Super Bowl. I'm pretty certain we're going to see a record this year. You know, this is a Super Bowl that kind of has everything. It's got Trump, it's got Taylor Swift, it's got Kendrick Lamar, it's going to have that record audience. But actually, I think the thing that interestingly is missing, and what we're talking about, is Gen AI. Now, you might say, but hang on, you know, we've heard that OpenAI are taking out their first ever Super Bowl spot. In fact, their first ever paid advertising. We've got Google doing AI ads and GoDaddy and Meta. But actually, all of the ads that we're going to see in the Super Bowl on Sunday, or certainly all the ones we've been teased so far, a lot of them are talking about generative AI, but none of them are actually using generative AI to create the content.
What does that say to you?
Well, I mean, it says to me that ad agencies have got a lot of catching up to do. And why do I say that? Because if you look at the content that's being put out in the world at the moment using Gen AI, it's just absolutely spectacular. But it's all being done by creators. And actually, there's quite a seminal moment last summer in July when a creator created a spec ad for Volvo in under a day for a couple of $1,000s. And you look at it, and it's every bit as good as the TV commercials for car brands that are costing $1 million and taking 6 months. And I think, you know, almost, if you look at, we've just lived through this enormous revolution of the creator economy. Today, there's 250 million people who make a living in the creator economy. And we kind of like to say that if the mobile phone turned everyone into a creator, generative AI turns everyone into an ad agency. And I think this, for me, will be the last ever Super Bowl we see without, you know, an enormous amount of Gen AI content in it.
We'll hold you to that in a year.
That's pretty wild, though, David. You know, when we think about disruption and what AI, I kind of get it in the creative universe, but what does it mean for all the artists that are out there? Is it mean more work because they can produce a lot more content and maybe the cost goes down and more people will tap into the creation of ads and marketing? Or does it mean a lot of folks who are now designing ads and content will not have a job anymore?
So look, I mean, it's interesting. When the camera was invented, one of the famous French painters said, you know, this is the end of painting. And actually it wasn't. It was the birth of Impressionism. I mean, I just made the point that, you know, we now have 250 million people in the creator economy. So look, probably the best analogy I could give is if you were to kind of compare it with human aviation. So if you can imagine, you know, thinking back to those early attempts of humans to fly, and you're watching someone who's built this contraption, they kind of fly 300 yards and then plummet into the ground. When you're watching that, it would be impossible to comprehend that there would be a time where 4 billion passengers flew around the world, where there'd be new jobs like air traffic controller and pilot, and, you know, those lovely people who take our liquids in the plastic bags as we're going through the security machines. The biggest retail luxury shopping centers in the world would be in the airports of, you know, Paris and London and Singapore and Dubai. And it's a very similar thing. We're at the start of this revolution. And of course, humans are always worried. They go, oh my God, it's going to replace us. And I think if you look back over time, that's actually never been the case. And personally, I don't believe it's going to be the case this time around. I mean, in the 1800s, over 95% of the population worked in farming or making food. Today, it's less than 2%. So logically, no one should have a job, but no, we just do different things. And I think that it's just, if you spend any time playing with the tools and looking at what they're able to do, it's just spectacular. I mean, Google launched VO2 at the start of this year, and it's mind-blowing what it can do already. And we'll look back in a year and think that what it can do now is pretty average.
Well, so play that out for us a little bit, with the farming analogy. I like that one a lot. And help us understand what it will look like in the future. I mean, if we think about it from the perspective of, okay, this is what people used to do. What are we going to be doing, 5-10 years from now that we can't even imagine?
Well, look, I mean, we work with 8 of the world's top 10 global advertisers, 60 of the top 100. And what they have seen really quickly is just how game-changing this is, because it kind of solves the holy grail of marketing, is that you can create content that is better, faster, and cheaper. So literally in the last 3 months, we've created 235,000 pieces of in-market content for 3 of the world's top 10 global advertisers. And across that content, it's being created 62% faster, 55% cheaper, and delivered a 40% better return on investment. And I think that's what's so amazing. It's not just that it's sometimes better and sometimes faster and sometimes cheaper. It is always better, faster, and cheaper. And I think that's going to be pretty game-changing in terms of the impact that it has for all brands and in and around marketing and advertising. Now, what it's going to do, obviously, we think that every major global advertiser is going to be able to reduce the amount of money they're spending on content by, at least 30%, probably 50%. And then they can decide, do you take that and put it back into media spend and spend more, buy more Super Bowl spots because you've got more $8 million to spend if you're not spending millions on the production side, or do you take it to the bottom line? And so, look, we're going to go into this incredible revolution, this incredible, and we're going to see a huge shift and a change in how marketing works. I mean, there will be an expectation that we all have hyper-personalized content. We're talking about the Super Bowl. If you think about the famous Nike and Adidas ads that everyone grew up with, I mean, every single person on the planet, if they want to, will be able to see themselves, playing basketball against LeBron one-on-one, as if it was shot like that at high quality by a director. And then we can get into areas like share of model. And share of model is the whole concept that in the previous decade, it's been where do you perform on search. In the next decade, it's like, what do the LLMs think of your business and brand? And we did a piece of research. Over 60% of people under the age of 30 are now finding out and being influenced by their choice of brand or product by the LLM. So we're heading into this kind of pretty wild new marketing world. And I think it's coming at a speed that I've never seen in my career.
Well, so, it's one thing I was listening to you that when we think about one of the concerns on the market today, obviously tariffs were at play. There was some economic news in terms of consumer sentiment and inflation expectations among people thinking that prices will be higher. But I do wonder about, do you buy into that AI, certainly when it comes to the marketing world, the advertising world, it is going to cut costs a lot?
Oh, I mean, on the content creation side of things, it's dramatic. I mean, those stats I quoted aren't sort of like hypothetical. I mean, it's not just that it's going to cost a lot. Your content will be better. You'll be able to create it faster, and you'll be able to create more of it. And this is all interesting because we're going to head into a world, and obviously everyone is talking about the agentic future, and it's all about agents. And I'm not sure if you played around with Operator that ChatGPT launched a couple of weeks ago, but I literally got up one Saturday morning and I ordered my bread from the local bakery and the juices, and I booked my hotel in Paris, and I looked for Soccer World Cup tickets, and I sent 3 emails, and it did it all seamlessly.
So this is explain what it is for people who don't know what it is. It's basically a personal assistant that you're the one used to doing that Googling, or an admin will do that for you, but this agent, who you'd pay what, $200 a month for it?
Yeah, so anyone who had the kind of top level of ChatGPT got it. Yeah, I mean, basically what it does is it is working in your browser, and it goes off and does all these things for you. And every now and again, it comes back and says, hey, you have to authenticate that you're a human because it's not so good at doing the captures and all of that. But it was remarkable. And I think this tech revolution is different on 3 big levels. The first one is it's happening faster than any technology revolution we've ever seen. I launched Australia's first internet agency in in 1998. And none of us in 1988 thought you would ever watch a video on a computer. Now, when I fly back home to New York on Sunday, I'll be streaming Netflix on my mobile phone at 40,000 feet, but that took 20 years. The same level of progress is taking months now. The second thing is the early versions of this technology are really very good. If we think about what the precursor to the mobile, the iPhone, it was the Newton and the Palm Pilot, and they were terrible. And then the iPhone was amazing. But again, it took 20 years. The first version of Operator, I was able to literally do stuff, transact immediately, and it was good. And it's just going to get better and better. And I think the big difference than any technology before is we've never created, it's more than a tool. We've never created a technology before that can think for itself. And that's why every single major CEO of any tech company is saying, this is the biggest invention in humanity.
Well, David, just got about a minute left here. How did DeepSeek, the news that we got a couple of weeks ago, how did that change or impact everything in terms of the conversation around AI? Does it just feed into, again, it might not be as expensive that everyone thinks it is?
Yeah, look, so I think whether you think that DeepSeek was an amazing advance in artificial intelligence or just proof that, humans aren't that intelligent and stock markets, just go on a run at the slightest thing, or both. I think, look, DeepSeek wasn't any better. What was interesting about it is it cost $6 million to train, not, hundreds of millions, and it used kind of mid-range NVIDIA chips, not top end. But this is going to happen every week. Every month someone's going to come out with something new. And if every time someone comes out with something new and great, the markets go up and down, it's going to be a fun time for day traders. But I think it was a great step forward. But then obviously, if you spent any time asking it about Tiananmen Square or the South China Seas, it was quite interesting. It would give you a great answer and then immediately wipe it out. So at the time when people are worried about TikTok being owned by China, is the US going to build its kind of whole AI infrastructure on a platform like that?
All right.
I don't think so.
Interesting stuff about marketing and ads and Super Bowl and, of course, AI. David Jones, thanks so much, CEO of the Brand Tech Group, which helps make brands makes their marketing more efficient.
Company works with companies including Google, LVMH, Microsoft, and more. Hey, Redhead crossing the Bloomberg terminal. Bank of America raising Brian Moynihan's 2024 pay to $35 million from $29 million. That's a 21% increase. It's pretty good.
That's pretty good. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. A down Friday, losing week as well. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. Offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. A down Friday, the Dow, the S&P, and NASDAQ all ending the week in the red. S&P down 0.9% today, down 57. Finishing the week, heading into the weekend at 6,025. The Dow was down 444, down 1%. NASDAQ down 1.4%. The 10-year 4.49%, with the 2-year 4.28%. Gold up $4.50 the ounce to $28.61, gain of 0.2%, while West Texas Intermediate crude up 0.5, $70.99 a barrel. Traders worried about the potential impacts of tariffs on inflation didn't get much relief from economic data this morning that only underscored concerns over price pressures, reinforcing speculation that the Fed will be in no rush to cut rates. As for the market backdrop, Andrew Cry is co-CIO of Crescent Grove Advisors, and he was a guest right here on Bloomberg Business Week.
So I think it just sort of changes the dynamic day in, day out. Again, it doesn't necessarily affect the way that we think about deploying a portfolio on a 3 or 5 year basis, but I think that the confidence number is a great indication of just kind of the weight that can have, the toll that it can take. Also, the 1 year forward inflation expectations that we saw in the University of Michigan survey. I think that certainly ties into the tariff picture.
Andrew Cry, co-CIO of Crescent Grove Advisors, interviewed right here on Bloomberg Business Week. Again, recapping stocks lower, S&P down by 1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Carol, you waging any on the big game this weekend?
I'm not really that kind of a person. I don't do a lot of betting. A lot of reticket here and there, but not my kind of thing.
I did a little Super Bowl squares action here in the Bloomberg newsroom.
How come I didn't get asked?
I don't know. I think it's something from like a few years ago, and I'm on this list. And I just, Venmo $10 or whatever,
It was about
$5.
being on the list.
Yeah. Well, next year, 2026 Super Bowl will keep you in mind. There is big money, though, in sports betting.
I hear.
According to the American Gaming Association, Americans will bet $1.39 billion legally just on the Super Bowl. That's legally.
That's a lot of money.
Yeah, that is a lot of money. Adam Greenblatt is BetMGM CEO. BetMGM is the sports betting and iGaming operator. It's jointly owned by MGM Resorts International and Entain. Adam joins us from New Orleans. Adam, how are things going ahead of the big game this weekend in New Orleans?
Well, things are going great. There's been an incredible amount of preparation for what will be the biggest day of the year for us. BetMGM is really prepared. We're offering more markets on this single event than on anything else in the year. We've got a bunch of promotions lined up, VIP activations. So a lot goes into the preparation and execution, and the energy in the city is amazing.
How important is a day like this for you guys in terms of your bottom line?
So it's interesting. So it really depends on how the money falls. So where if there's a balanced, if betting is balanced. So by contrast to last year, where certainly for BetMGM we had a lopsided book, so a lot of money on really then the Chiefs. This year has been a lot more balanced. So while the Chiefs are the favorites for Sunday's event, the money is going on the Eagles at the moment, and an Eagles victory would be great for us. And it would be a very good day, but won't make the month, won't make the quarter, based on how the money is distributed today.
Oh.
In terms of growth, what is give us the trajectory here? Because now that in many parts of the U.S. this is legal, and indeed we're just seeing it grow in terms of where it's allowed, what can you tell us about growth?
Well, the growth trajectory has been remarkable. It's hard to fathom, really, that the industry was only legalized in late 2018. We now have sports betting legal in 38 states, and we have iGaming legal in 5 states. BetMGM, we've just put out our 2024 earnings release. And we've announced that we're now generated in 2024, we generated $2.1 billion of revenue. We've guided to $2.4 to $2.5 billion of dollars of revenue in 2025, and growing strongly. And within that, both sports betting and iGaming are really showing incredible growth. And I think we still have a lot to go. And I think this is the important part. On the iGaming side, we exited the fourth quarter of 2024 with 55% year-on-year growth of active players, and this is on a same-state basis. So the depth and interest in the sector is remarkable. And on the sports side, the handle, which is how much people bet, was up in the fourth quarter 40% year-on-year. And this, I think, is just, we have a long runway ahead of more state adoption in sports, but really in terms of the state adoption, the addressable market is more vast in the world of iGaming.
I'm having trouble understanding the difference between sports gaming, gambling, and iGaming. What's the distinction?
Yeah, so if you want to play a hand of poker, if you'd like to spin a roulette wheel, if you'd like to sit down at a virtual poker table with a real live dealer, but on your computer, on your phone, you can do that. And that's what we refer to as iGaming. And sports betting is the thing that it's the underlying event is a sports event.
So iGaming is online gambling that's not related to sports?
Correct.
Where's the growth, or the most growth coming from?
The growth is everywhere. So on the sports side, the growth is in deeper market penetration. So that's one. So more states, and within the existing states, more recreational adoption. One of the beautiful things about this game this weekend is that it has such tremendous reach. So I'll give you an example of why that's relevant. So in terms of the markets we offer, BetMGM is offering over 1,500 different ways to bet on the game this weekend. And of course, you have all of the usual suspects, the total, the money line, the spread. But we also have for this game, how long's the national anthem? What's the first song in the halftime show? Is Travis Kelce, this is in Ontario, is Travis Kelce going to propose to Taylor Swift?
What's the biggest bet that people are playing with right now?
The biggest bet, well, in terms of money or in terms of interest?
Oh, gosh.
Interest.
I'll take both.
So the vast majority of bets are on what they term the traditional six-pack. So who's going to win,
right?
By how much, and how many points are going to be scored. And it's the over and under on those latter two. And so that's where probably 60% of the betting volume will take place.
Right.
In prop bets, which are things that are outside of those big game outcomes, it's who's going to... One of the things that BetMGM offers is our touchdown market. So we offer a wide range of who's going to score first, how many scores will Saquon make, what's the longest touchdown going to be, and that's almost like a family, a thematic family of bet types, which we're leaning into. That's proving very, very popular as a prop bet for our players. But again, to the previous point, we also have a very, very popular prop bet, coin toss. So who's going to win the coin toss? And one of the reason this is so interesting and popular, because you don't need to know anything about football. Right, it's the oldest yes or no bets in the world. 50-50 odds. You don't have to know anything about odds, but it's there. And just for what it's worth, 65% of bettors think it's going to be a Chiefs winning the coin toss.
Hey, Adam, what do you say to those folks who say, this has gotten out of hand? It's too easy for us to part with money. It's too addictive with our smartphones. There needs to be some sort of, not ban, but, sports gambling has gotten out of hand. What do you say to those folks?
So really the topic that's at the heart of your question is responsible gambling. And BetMGM is very, very committed to our responsible gambling obligations and we put our money where our mouth is. We have we're investing real hard dollars in research. We have a relationship with MGM Resorts and NFL teams that we're advertising responsible gambling messages in stadia. We're investing in a partner called Kindbridge, which offers support and referrals, counseling services for those who self-exclude. So people who are saying, look, my gambling, I'm not comfortable with. I'd like to sit out, and so we offer counseling services for them. We also have already now multiple years a very deep relationship with something called GameSense, which was the pioneering, really the gold standard in responsible gambling messaging and education and support. And that's just a sample. You know, we've also, for example, we've got now in the NFL the program for the day. Every single person that in the stadium will have access to. We have a full page responsible gambling advert, which stars Conor McDavid, one of our BetMGM ambassadors. Really, and you know, these are just examples of the sincerity with which we approach this topic. And frankly, it's existential for the industry. You know, all of the operators, all of the leading operators certainly are very committed to this cause. We've got together and we formed something called ROGA, the Responsible Gambling Association, where we are seeking to create a universal and nationwide self-exclusion register to make sure that we're looking after players in a coordinated way. So there's a lot going on, but the topic is very important.
Do you feel like it's working, the awareness, and making sure that people aren't getting into trouble who probably shouldn't?
I think we're certainly making progress. We're certainly making progress. Yes, is it working? Is the impact of our initiatives, is it making an impact? Yes. Are there always vulnerable people that need to be protected? For sure. But for me, I see this as an opportunity and the most compelling argument for why it should be legalized everywhere. Because it is naive of us to believe that it's not happening illegally offshore. And I know in the intro you referred to the AGA's market sizing. How many bets are going to be taken this? Last year it was in the 20s.
Yeah.
This year it's in the 1 and 1.4. Well, and that's because there's so much illegal activity taking place today, where those bettors are not being protected, supported, and frankly, states are losing out from tax revenue that can be reinvested in these types of important topics.
We certainly hear you. Adam, thank you so much. Adam Greenblatt, he is BetMGM Chief Executive Officer with the big game and the betting that's happening.
Well, sticking with the Super Bowl, our own Scarlett Fu and Raymond Bostic sat down this week with Robert Kraft. Yes, that Robert Kraft, New England Patriots chairman and CEO, as well as the founder of the Foundation to Combat Anti-Semitism. And they talked about this weekend's game. He has, of course, won a few Super Bowls.
The American people are great people. We found 80% of Americans don't understand what's going on in terms of hate building up in this country, and it's doing it like it's never done before in my lifetime. And why people would hate someone because how they worship God or what their political feelings are or what their skin color is. You know, our families all came to this country and were able to live the dream because of the way we accepted everything in America. And I think there's been a growth of hate. Last year at the Super Bowl, we had Dr. Clarence Jones, who wrote Martin Luther King's I Have a Dream speech.
Right.
And his basic message was that silence from people who see inappropriate behavior is the worst enemy of Americans. And we preach that message, and now we're asking people to reevaluate why they hate. You know, we're born with empathy and love, and hate is learned. And it's so dysfunctional to what's great for America. You know, in 2019, I started this foundation because after seeing Charlottesville and the Tree of Life, I saw signs of what was going on in Germany in the 30s.
Yeah.
And I didn't want a repeat of the 40s.
The two folks featured in that ad, one, Tom Brady, of course, who you have a long-standing relationship with, and Snoop Dogg, of course, who has a long-standing relationship with Tom Brady. What was their reaction when you approached them about doing this ad?
Well, you probably wouldn't believe it, but I've had a relationship with Snoop for 30 years. And, you know, when I called him, you know, he just said, hey, brother, I'm in for preaching love. Whatever we can do to stop this hate, count me in 100%. And that really, you know, people wouldn't think we have that connection and have worked together on other things. And then, of course, Tom Brady is one of a kind in his field and so special and unique and one of the greatest human beings on the planet. And for him to be willing to speak out as well. And he liked the idea of the two of them from different backgrounds speaking about what was good for the American people and all people.
Absolutely. Robert, I'm curious how you plan to measure the effectiveness of this ad campaign on Super Bowl Sunday and of course, during the week leading up to it, and other efforts to amplify the cause. You're able, obviously, to track views, but beyond that, how are you measuring the impact?
Well, we have a very scientific way of an interview process where it's over 8,000 people random selected from our group. And they educate us in terms of, these are people who we've had no contact with. It's done very scientifically. And what we learn from that is how we want to proceed to try to continue to educate the American population.
Given your background with the Patriots, I mean, there has been a lot of talk over the years how sports was kind of one of those, you know, unilateral unifiers in this country. You know, of course, we all pick our cities and our teams, but at the end of the day, if you go to a stadium or you go to a bar to watch the games, they're probably the most diversity you're going to see in any sort of stage in your life. And I'm wondering, can it be that again, or was that never the case?
No, I really believe that sports and music those are the two things that bring people together from all walks of life, all backgrounds. Those of us who have benefited by this country have a responsibility to stand up. And I've had a lot of wonderful people contribute to us who want to be part of the effort, because we're just trying to lead and help manage a great group of people that have this on their agenda to fight back and push back against all this hate.
Well, there you have it. That was Robert Kraft, along with our own Scarlett Fu and Romaine Bostick.
Yeah, interesting stuff there. Certainly.
They're not in the Super Bowl this year.
What?
They're not. The Patriots are not in the Super Bowl.
No, they are not.
If Paul Brennan were here,
he wouldn't be in on Monday.
He'd scream something when I said, you know, that the Patriots are not in the Super Bowl.
Oh, yeah.
He's a big,
if they were, though,
big Patriots fan.
You know, he would take off like Monday because it was this.
Or he'd be there.
He'd do some partying. I don't know that he ever went to the game. Actually.
Okay. Well, there's also next year.
All right, guys, that's going to do it for this edition of Bloomberg Business Week. I was just looking at MVP.
It's a great terminal function.
Yep. Who do you think is the most searched on individual?
Donald Trump.
In the past week.
Oh, in the past week? Yeah. I think Donald Trump.
Nope, Scott Bessent.
Oh, interesting.
Yeah,
okay.
Treasury Secretary. Which, if you missed our interview, our Saleha Mohsin's interview, just be sure to check it out on the Bloomberg and at Bloomberg.com. Hey, also, before you get into the Super Bowl this weekend, check out our Bloomberg Business Week weekend show. It's on Bloomberg Radio at 8 a.m. Wall Street time. Also, our podcast feed. We talk flowers. We talk about trust when it comes to business and media with Richard Edelman. We also talk a little Palantir and Elon, so some good stuff. Our thanks to our team, Sarah Lizzie, Elizabeth Cedrin.
Is Meredith Frank in there?
Meredith Frank.